Bitcoin is not like traditional currencies. Governments can print more money whenever they want. Bitcoin is different. It has a limited supply, and it's released slowly over time. This controlled release is achieved through a process called halving. Imagine a magic money machine that cuts its output in half every 4 years. That's essentially what Bitcoin halving does. Every 210,000 blocks mined, or approximately every 4 years, the reward for mining Bitcoin is cut in half. This event is hard-coded into Bitcoin's DNA. It's not controlled by any government, company, or individual. This predictable and unchangeable event is at the heart of Bitcoin's scarcity. Halving is crucial because it controls the rate at which new Bitcoins are created. This process ensures that Bitcoin's inflation rate steadily decreases over time, eventually reaching zero. This makes Bitcoin fundamentally different from traditional currencies prone to inflation. Miners are the backbone of the Bitcoin network. They use powerful computers to solve complex mathematical problems, validating and adding transactions to the blockchain. As a reward for their efforts, miners receive Bitcoins. Halving directly impacts miners because it cuts their reward in half. When the reward is halved, miners receive fewer Bitcoins for the same amount of work. This can impact their profitability, especially those with high operating costs. However, history has shown that halving often leads to a surge in Bitcoin's price. This price increase can offset the reduced block reward, making mining profitable again. This dynamic interplay between miners, halving, and price is a key driver of Bitcoin's economics. Bitcoin has undergone 3 halvings since its creation. The first halving occurred in 2012, reducing the block reward from 50 to 25 Bitcoins. The second halving happened in 2016, cutting it further to 12.5 Bitcoins. The third halving took place in May 2020, lowering the reward to 6.25 Bitcoins. And the most recent halving took place on April 20th, 2024. Each of these events has preceded significant bull runs in Bitcoin's price. While correlation doesn't equal causation, the historical data suggests that halving plays a crucial role in Bitcoin's price cycles. The reduced supply pressure created by halving, combined with increasing demand, often leads to price appreciation. This pattern has made halving a focal point for investors and enthusiasts alike. Altseason and the cycle of Bitcoin's price. The cryptocurrency market is cyclical. Bitcoin, being the largest cryptocurrency, often dictates the market's overall sentiment. When Bitcoin's price rises, other cryptocurrencies, often referred to as altcoins, tend to follow. This period of altcoin outperformance is often called altseason. Altseason typically occurs during the later stages of a Bitcoin bull market. As Bitcoin reaches a peak, investors often seek alternative investment opportunities, pouring capital into altcoins. This influx of capital can lead to parabolic price increases in the altcoin market. However, it's crucial to remember that altseason is often followed by a market correction. Understanding this cyclical nature is essential for making informed investment decisions. Understanding the halving can be your edge as an investor. Bitcoin halving is more than just a technical event. It's a fundamental driver of Bitcoin's economics. For investors, understanding halving is crucial for several reasons. Primarily, it provides a framework for understanding Bitcoin's price cycles. While past performance is not indicative of future results, historical data can help investors identify potential trends. Next, the halving highlights Bitcoin's key value proposition: scarcity. Unlike traditional currencies, Bitcoin has a finite supply, making it a potentially attractive store of value. Finally, understanding halving allows investors to participate in the Bitcoin market from a place of knowledge. By grasping the fundamentals of halving, investors can make more informed decisions and navigate the exciting world of cryptocurrencies with greater confidence.